Ladies and gentlemen, good day, and welcome to the Crizac Limited Q2 FY26 earnings conference call hosted by Crizac Securities Private Limited. As a reminder, all participant lines will remain in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star, then 0 on your touchtone telephone. Please note that this conference is being recorded. I will now hand the conference over to Mr. Gaurav Gupta from Crizac Securities Private Limited for opening remarks. Thank you, and over to you, Gaurav.
Hi, good afternoon, everyone, and welcome to Crizac's Q2 FY26 earnings conference call. We have with us Dr. Vikas Agarwal, Chairman and Managing Director of the company, and Mr. Manish Agarwal, Chief Financial Officer of the company. Vikas, sir, if you can start by giving your overview on the Q2 FY26 performance, as well as outlook for FY26 and beyond, and then we'll open up for Q&A. Over to you, Vikas, sir.
Sure. Thanks, Gaurav. Our Q2 numbers are in line with our guidance. The revenue from operation has grown to 162 CR. Including other income, it comes to 169 CR. In terms of expenses, it's 105 CR. So company had a net profit of 64 CR. After deducting all the bits and pieces, the net profit comes to 48 CR. Just a moment. In terms of operations, our number of application has grown year-on-year basis. Same is with reference to agents and overall revenue. In terms of profit margin, we have grown on the same. As mentioned in the past, Q2 is normally light and composed of roughly 10 to 12% of our revenue. Growth has been consistent compared to last quarter at the same time, where our in September 24, our profit was 61 crores. 61 CR. September 24. And September 84 crores. September 94 crores. 25, it's 95 CR. Other financials, I'll ask our CFO Manish to give you the details.
Hi. On year-on-year basis, the company has grown by 30%, and the revenue is 162 crores for Q2 FY26, compared to revenue of 129 crores for Q2 FY25. Coming to the PAT, our PAT for Q2 FY26 is 48.33 crores, compared to 20 crores in Q2 FY25. So, the company has been growing, and this quarter, the results are quite positive.
Yeah, we have to take any questions.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use their handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Naitik Mohta from Sequent Investment. Please go ahead.
Hello, sir. Congratulations on very good set of numbers. I have actually three questions. First, I would want to know that because of the change in the H-1B visa rules in the U.S., is there a sentimental change in students going to the U.S., and does this impact our business in a positive or a negative way? That's the first question. Second question is the margin guidance of 25% what we've been maintaining. Given this quarter margin being a light quarter, we have done significantly better margins. So would you like to change the margin guidance? And third question is, what was the number of universities that we had tied up with in the last quarter, and what is the number in this quarter?
Sure. Thanks for your questions. With reference to H-1B visa, yes, there is some sentimental impact for U.S. education, but for us, the number or the revenue contribution from U.S. operations is very low. So for us, this any kind of negative news for USA is positive. Reason being, the student who wants to study abroad, instead of choosing US, they are choosing UK as a destination or one of the destinations. So you will see better numbers because of H-1B impact. Coming back to profit margin guidance, though this quarter we have done pretty good, we believe the guidance what we have given should be equally good and positive in our opinion. In terms of number of universities, it has grown significantly. Normally, with universities, today we represent more than 250 universities as on end of quarter 2, which was, I think, 170 last year.
Okay. Thank you, sir. I will get back in the queue if I have any other questions.
Sure, thank you.
Thank you. The next question comes from the line of Nilabja Dey from Ashmore Research. Please go ahead.
Okay, sir, first of all, congratulations on a very good set of numbers. Sir, the first question is that in terms of you, in the earlier call you mentioned that Q1 and Q2 combines around 30% of your total revenue and 70% of the revenue comes from the H2. So should we go ahead with these assumptions in FY26, given some disruptions in the US front? But yes, UK and Canada obviously have picked up. So just like to know, this is my first question.
In terms of our guidance, yes, you're right, Nilab. H1 constitutes roughly 30%, and which is in line with what has come out. And we believe the ratio should remain broadly similar for second half.
Okay. And my second question is this, sir, you mentioned that last time, I know you have mentioned that you are exploring a lot of, because the student loan services is one of the most growing sector in Indian perspectives, okay? I have personally experienced also. So you mentioned actively exploring. So is there any, have you taken any step in this direction?
Yes, Nirav, we have signed up with more than 7 or 8 NBFC and banks, and we believe the company should go live with loan as a distributor in coming quarter 3.
Okay. Okay. And finally, you mentioned last time that you are trying to expand in the Middle East also. So is there any progress in this direction? Because a lot of foreign universities have already moved to the Middle East. So what's your take on, because why I'm asking you, because nowadays there are a lot of issues with immigrants in all the developed countries, and diversification is one of the best way to move, as we understand from these recent tariff experience. So what you are doing from that to diversifying specifically from the UK market? This is my last question.
Yeah. we believe exactly the same what you said, and we have tied up with multiple UAE universities in the last 6-8 months. The other thing what we have done is we have set up a subsidiary of Crizac in UAE for our expansion into Middle East and Gulf countries. We believe this should help us grow further in that region and help us to diversify into multiple destination market.
Okay. Thank you. All the best.
Thank you.
Thank you. The next question comes from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Yeah, I'm audible, sir.
Yes, you are, Deepak.
Yeah, thank you very much, sir, for this opportunity. So just first up, I just wanted to understand what would be our geographical composition of student right now? I mean, from which country, where, how much percentage placement we are doing right now?
In terms of geographical concentration, India would contribute roughly 50% as of today, and same goes for rest of the world. So it is quite diversified.
And rest of the world mix would be, I mean top 3, 4.
Africa would be the biggest one, followed by South Asia, Southeast Asia, and China.
Southeast Asia and China. So Africa would be how much?
Contributing almost roughly 25%.
Roughly 25% Africa. And Southeast Asia and China would be what, 5-10%?
Remaining 25%.
Come again? Sorry, your voice was... Huh?
Yeah, I mean, we haven't done an exact calculation, but the balance will be coming from Southeast Asia and China.
So ideally our Canada, US and all would be very small for us, or what?
Those are destination countries and those are very small for us.
Okay. Understood. Fair enough. So if I have to do a rough calculation of what you mentioned, first half would be 30% and second half would be 70%. So ideally, I mean, we are looking to grow about 45% this year. I mean, that's how you can come to about 30-70% kind of a ratio?
No, Deepak, we have given a guidance of 25%. We believe because of lot of tailwinds, we should grow a bit higher than that, but we'll still keep our guidance conservative, saying between 25 and 30%.
So 25 to 30% growth we are looking at, right?
Yes.
Okay. I got this. And in terms of, platform, generally most of the revenue we are getting would be from the platform only. Would that be a right understanding?
Yes.
Okay. And what sort of, opportunity size you see in the tie-up with NBFC? How big that revenue stream can scale up for us?
It will take time, but eventually it will end up between 1 and 2% of our EBITDA.
So small is what we are looking at. Okay, understood.
Yeah.
And just last thing from my side, seasonally, how do we look at? Generally you said 2Q is generally light. So which are your heavy quarters?
Q3 would be closer to 30%, Q4 will be 40%.
Q3 is 30% and Q4 would be 40%. Of
Yes.
the total annual revenue mix, or what?
Yes.
Okay. I think that would it from my side. All the very best to you. Thank you so much.
Thanks, Deepak.
Thank you. The next question comes from the line of Kaitav Shah from Anand Rathi. Please go ahead.
Yeah, congratulations, sir. Just one question on the platform, technology platform. How is that coming around? Can you share more insights about how some of the applications now have become faster? Number one. Number two, on the mix from the university or country-wise, if you can give us revenue share or an outlook on that.
In terms of platform, we have added a lot of capabilities like automation and AI. Last time when we had a meet, we mentioned that we are looking at adding those ones. So those capabilities are already integrated, and we are. This is a continuous process, and we are adding more and more AI to our platform to make agents and students' journey more comfortable, more reliable. In terms of country mix, From a source country perspective, roughly Indian application would be 50, while rest of the world would be same. In terms of revenue, most of the revenues would be coming from UK, roughly 90 to 95%, because quarter two, rest of the country don't offer any intake, except one university in Ireland.
Sure. And sir, over 3 years period, how shall this number move in terms of moving towards other geographies? Also, given that US, I think, as a overall destination, perhaps now because of the supply being very tight, I mean demand. So how will that shape up? Does any other geography benefit from that?
Sure. UK is already benefiting from the headwinds from USA or the negative news. So we believe UK would continue to grow. Over the next 3 years, as a company, we believe our New Zealand, Australia, Dubai would grow significantly. At the same time, in 3 years' time, we believe our India as a destination would expand quite a bit as well.
Got it. Thank you so much.
Thank you, Ketan.
Thank you. The next question comes from the line of Ashish Parekh from MK Investment Managers Limited. Please go ahead.
Yeah, thank you, sir. So my first question would be, so as you mentioned that any negative news on the US is actually positive for the business. But I just wanted to understand, so US is such a huge market and we are not, present over there. So that would have been a virgin territory which would be a growth driver actually for us. And, we are present in UK for such a long time, I think since the inception of business. So how much penetration do you think is still there in the UK side, and where we're looking at the US business, and right now due to that macro engine, we are not looking into it. So your thoughts on that? And secondly, on your this thing saying that H2 is 70% of your business, but with the student loan business going up in the Q3 and Q4, so is that factored in the 70%, or that is an incremental thing that can be seen?
Yeah. I mean, coming to your question step by step, USA, our concentration is very low, lower than 1%. So the impact has not been with the company. It takes between 1 and 3 years time for a company to penetrate into any new destination country. So yes, penetration for US is slow because of the headwinds and negative news. But since our base is very low, we are not much affected for that one. The numbers which has gone down for US is getting compensated with UK. In terms of growth left for UK, at the moment globally our percentage share for UK would be closer to 3%. This can grow significantly, much higher. For example, in India, our percentage share is closer to 10%. So we believe as we are expanded into multiple new countries, from a source perspective, our percentage of UK market will keep on growing for next few years. At the same time, we are expanding into other destinations as well. As mentioned earlier, we have expanded into Middle East, multiple universities. We are looking at expanding into Southeast Asian countries like Singapore and Malaysia. And at the same time, we have started our expansion into Australia and New Zealand. So this should be our growth driver till US numbers comes into picture. Ashish, you still there?
Yeah, and yes, sir. And then my second question on the student loan business being included or not in the 70% mix intensity.
No, student loan income from student loan will not be included because it will start in coming quarter, and those things will take a lot of time for it to become matured.
Okay, understood. Yeah, thank you.
Thank you. The next question comes from the line of Devendra Patel, who is an individual investor. Please go ahead.
Hello.
Hi, Devendra.
People? Hi. Yeah.
Okay. First up, I didn't get the chance to congratulate to you at last con call. So Dr. Vikas sir and Christopher and Mr. Manit, congratulations for coming up with the IPO with the company which is established in 2014 and with the market cap of 5,000 crores. It's a commendable achievement for the entrepreneur. So, sir, I wanted to know, what is your USP and what you are seeing for the Crizac to grow, say, in next 3 or 5 years? That is my first question, sir.
Sure. Thank you, Devendra, for wishes. With reference to USP, our service, our portfolio of universities, our distribution network across the globe are very unique, and it provides university with a very diversified student numbers, which most of the universities want. In terms of growth, at the moment, UK is our biggest destination market. We want to expand into multiple different destination markets. We want to expand into more and more source market as well. Both these things would give a lot of growth in terms of both revenue for the company.
Thank you, sir. And my second question is in the same line, like the Christopher is there in UK, and I believe you 95% of your destination revenue came from the UK. So that is it is also a problem, because if something happened to UK, then it's a big problem. So my question is that since you are the profitable company, and why you are not able to replicate the same success in the other country, like say in Australia, or New Zealand, or in USA? And my second question is that, like, again, you are the profitable company, so you can able to spend, but why till date, why didn't you not expand into the student loan or accommodation or any other nearby area? Because this is very important, because Crizac is the only few companies who are successful in the education, in the foreign education particularly. So this is my two questions to you.
Sure. Thanks, Devendra. In terms of our UK constitution, it has gone down from 95% to less than 90% as of now, and we expect this to go down further and further. We are expanding to other countries as well. For example, over the last 2 years, we became quite big for Ireland, and that constitutes roughly 7% of our revenue in last year. We are looking at expanding into other geographies as well. US was one of our first plan, but now we are looking at expanding into Middle East, Australia, and New Zealand. We believe over the next 1 or 2 years, our numbers should go up quite big in multiple of these geographies which I have mentioned, and that should bring down the concentration further down and bring risk lower. Coming to loan and accommodation, yes, those two are attractive. This quarter, we started the accommodation as a service, and it's already live on our platform. We have started getting attraction. Loan, as mentioned earlier, we will be starting in coming quarter, and that will again go live in our platform very soon. Both these businesses takes time, and we were just trying to set up a right kind of tie-up with multiple banks and NBFC. At the same time, multiple home accommodation providers as well. Now both the things are in place, and these services should go live. It will take some time for this to become decently big to contribute revenue and profitability to our business, but this is live now.
Sure. Thank you so much. That is what I want to know. Thank you so much, and congratulations, Halpangi, to Crizac and all the team for the successful IPO and great result in this quarter. Thank you so much.
Thanks, Devendra.
Thank you. The next question comes from the line of Naman Golcha from Nirmal Bang Securities. Please go ahead.
Thank you for the opportunity, sir. So I have two questions. First, is it possible for you to provide us with the data of how many agents are actually, with us and how much are active? And second question is regarding the recent FTA speech that Mr. Starmer gave that in the future the UK universities will be set up in India. So what is our outlook on that, and will that lead to our concentration risk to reduce and increase in India? Thank you.
Yeah. Thanks, Naman. In terms of our active agents, it's roughly 4,600 as of today. With reference to FTA, it is a very positive news for India-UK corridor, and we believe that should help company to grow in this sector. With reference to setting up of universities in India, we believe it will take some time for it to mature, but this will help our vision of making India as a destination country. Since we already have a very strong distribution network outside India, we should be able to recruit good number of students both from India and outside India to recruit for these campuses. Having said that, 10 or 20 campuses would not be able to absorb all the number of students who studies abroad. So there will still be a big number of students going abroad, and that will not impact our business or growth in any way.
Okay, sir. And sir, another question, just a theme whether we are seeing on the ground whether students are preferring to go to UK currently, or there's still a dilemma between going to US and UK at the ground level right now.
At the ground level, what we are seeing is a lot of students who wanted to go to US are changing and picking UK as a destination. Normally, if you do a market survey, you'll find US has always been the first choice of student, especially for STEM course, followed by UK. So UK is gaining a lot of traction because of all the disturbance which are happening in USA. Plus, as you rightly said, with FTA and a lot of positive news coming from UK, that is also adding up to the positivity sentiment of the student.
Okay, sir. Thank you so much.
Thanks, Aman.
Thank you. Ladies and gentlemen, in the interest of time and fairness to others, we request you to restrict to 2 questions per participant. The next question comes from the line of Rajakumar Vaidyanathan from RK Invest. Please go ahead.
Yeah, good evening, sir. Can you hear me?
Yes, Raj.
Yeah, congratulations, a good set of numbers. So first thing, if I see your numbers in the presentation slide 5 and 6 and 7, the numbers are not in sync. So I just want to know which is the right slide. Because for Q2,
there was some mistake in the slide. They are uploading the revised slide in next half an hour.
Okay, the slide 5 is the correct slide.
The revenue is correct. The totaling is wrong. So it's showing incorrect path, but they will revise in next 15-30 minutes.
Okay, thank you. So, not a problem. Sir, the question is, your EBITDA margin has gone up from 25% to 39%, and given this is a lean quarter, I just want to know what is driving this improvement in margin.
Yeah, there are 2 components which has helped in this quarter. One, if you remember, last quarter we had roughly 4 CR of losses because of Forex. Now that we do a hedging and the pound has cooled down, so we have gained roughly 4 CR as a Forex, so all the losses has been recovered. Secondly, in this quarter we get a lot of annual bonus from universities. Since the academic intake is usually from September to July, we have received some bonuses which has shown a higher PAT.
Okay. So what is your sustainable margin? So I understand that in H1 you are doing 30% of top line and H2 is going to be 70%. So what is your sustainable EBITDA margin?
Sustainable EBITDA margin will be around 24-25%.
So similar to what you reported for FY25.
Yeah.
Okay. Sir, if you can just tell me what is the exact one-off, the Forex is 4 crores, so what is the bonus amount, if you can quantify that?
I mean, we haven't broken down into bonus because these are given per student basis by multiple universities based on the number of students. So you'll see as a final figure, the final total revenue is 162 CR.
Okay. No, this bonus you would have last year, the similar quarter as well, right? So, or is it something unique for this quarter?
Bonus is not paid as it gets included as a part of fees on the last quarter. So we don't keep a separate bonus numbers.
Okay. No, sorry to labor on that point. So my question is, even in the previous Q2, that is previous year, FY25, you would have received bonus. So the question is, what is driving the significant improvement in your margin?
Yeah, because we have done a higher number this year, so it's a combination of both bonuses and the Forex. Forex amount of 4 CR is quite big as well.
It contributes 10%.
Okay. So if I back this out, then your margin will be 25. Is that fair to say?
Kind of, yes.
Okay. Okay, great, sir. Thank you so much. Thanks for the clarification.
Thank you.
Thank you. The next question comes from the line of Utkarsh Somaiya from Eco Quantum Solutions Private Limited. Please go ahead.
Thank you for the opportunity. I have two questions. One being, your cash flow from operations is negative. So can you please help us understand why is that so? Because I see two line items, big line items that are affecting your cash flow. One is trade payables, which is a negative 95 crore figure, and the second is other financial liabilities, which is a negative 56 crore figure. So please explain this. And number two, I just wanted you to throw some light on your business model since I'm new to the company. So I believe you're a platform company, and as I observed from 2021, your revenues have gone from 100 crores to almost 800, but your margin has remained flat, which is unlike a platform business. Usually we see significant operating leverage as revenue scales up. So can you explain that a bit also? Thank you.
Hi, Utkarsh. Although we are a platform business, but you cannot compare us with Zomato or something where with increase in top line, your profit also increases substantially. Our major expenses is cost of services, which we pay to our channel partners, which is more or less constant. So with increase in top line, our cost of services increase proportionately.
Understood.
So that's why, although we are a platform business, but our margins are more or less constant because our line expenses are constant and they move in the same direction as the revenue.
Okay.
Now coming to your first question, why the cash flow is negative? This quarter, the amount of money which were expected to receive from the university, that gets a bit delayed. As a result, we have not paid to our channel partners. So the trade payable is negative.
So you have delayed payment. Ideally, that should improve your cash flow, right?
Technically, once we receive the payment, then only we make the payment. So unless we receive the payment, we don't pay the payment. So you'll see if there is a line item of trade receivable, in same proportion, you'll see a trade payable as well.
And how does the payment cycle usually work with the universities and the agents? Like, can you explain the cycle of when a student gets admission and how you get paid?
Once the student has received the visa and gets enrolled at the university, After that, university gives them roughly 30 days of cooling time. Post that, we would send the confirmation to the university of the list of students. They will reconfirm that yes, all these students have registered and the commission is payable. That's the time we would recognize the revenue. At the same time, that is the time when within 15 to 30 days, university would make the payment to us, and we would make the payment to the agent immediately once we receive the payment from university.
Thank you. We take the next question from the line of Ganesh from Dhanalakshmi. Please go ahead.
Yeah, thank you so much for giving me the opportunity. So, sir, just would like to know the distribution of, say, a student from India going into UK. Typically, what percentage of students go via agents and what percentage go directly, meaning approach the university directly?
Hi, Ganesh. Thank you for this one. Though there is no fixed data, but based on the survey done with university, roughly 60 to 70% of the students goes via agent, while 30% to 35% goes via direct online application.
And sir, so if we see our basic business model, that would be to connect the students to the universities. So one is the student acquisition strategy via agents. So do we have any exclusivity with agents or with the universities? Is my second question, sir.
We connect agents to the university. No, we don't have any exclusivity with either university or the agent. But these agents typically works with one or two platforms, and once they are comfortable with any of those ones, they stick to those ones. So even though we don't have a exclusive arrangement with any of these agents, what we have seen in a practical form is these agents have been working with us for many number of years.
Thank you. We take the next question from the line of Azruddin Jariwala from Samiksha Capital. Please go ahead.
Yeah, so thank you for giving me the opportunity, and congratulations on a very good set of numbers. Most of my questions were already answered. So can you just throw some light that you are expanding to the multiple newer geographies like Dubai, New Zealand, Ireland, and etc. So like most of the university are offering the scholarship and multiple schemes to the newcomers. So how are you seeing this trend at your particular platform, and the application traction to these newer geographies and the particular university from the different areas?
Thanks, Arun. With reference to our expansion to different areas, yes, universities do give scholarships, and we help students to get those scholarships. Expanding into different regions is actually helping students to have multiple choice of destination country, and they can plan their study abroad without getting affected for any disturbances. For example, US announced some curbs, so that would have disturbed the foreign dream of students going to USA. But now with expansion of multiple geographies for us, we can offer alternate options to same student, and that is helping the students in a better way.
Okay, thank you. And the next question is, like you already mentioned that 10 to 10 campus are entering in India and setting up their campuses. So I don't know about the on ground, but actually are you seeing any onset of any university entering into India and setting up their own campuses?
Yes, there are multiple universities. Roughly 9 universities signed up when UK Prime Minister was in India. So they are opening campus in various geographies. For example, Delhi, GIFT City, Mumbai, Bangalore. And it will take days, 1 or 2 which has gone live. For example, Southampton in Delhi has gone live, and this September will be their first intake. But for others, it will take 1 or 2 years. for it to become live.
Thank you. We take the next question from the line of Akshay Shah from Toro Wealth Managers. Please go ahead.
Yeah, thank you for the opportunity. Sir, we are hearing about that the UK is also tightening the immigration rules for the students. So, how are you seeing it on ground?
Hi, Akshay. UK is tightening immigration rule more for work than for students, with reference to increasing maintenance or other recommendations from white paper that has been announced almost 6-7 months earlier, and it is already baked into the growth.
Okay, so the students who are going there is also expecting to work post-study there. So it is impacting them also indirectly. That is, I want to understand it in better detail.
What they have done is, for example, for ILR, like leave to remain in the UK, they have increased from 5 years to 10 years. Usually a student does not take a view of 10 years plus 2 years of post-study. So 12-13 years at the time of applying or making a application. So it is not really impacting the numbers of students going abroad for studies. But you are right, UK is trying to make immigration a bit difficult for people who are trying to abuse it and not making it difficult for genuine students or people who want to go for a genuine work.
Thank you. We take the next question from the line of Rishabh Mehra from Demeter Advisors. Please go ahead.
Hi, am I audible? Hello, am I audible?
Yes, sir, you are.
Yes, Rishabh.
Hi. I just have one query around your growth. In your RHP, one of the line items you had was to grow and deepen your agent network in China. I see that your agent network has grown from around 11,500 to some 13,500 total agents. Just want to clarify, is there a bias towards China, and just understand where are you all, where is there a lot of focus on this plan to increase student flow from China?
Yes, we are growing in China. In fact, Christopher currently, who is our CEO of the company in UK, is in China at the moment. So both in terms of number of agents and the number of students going to UK has grown for China, and we still are quite bullish for China. But China is as developed market, or in fact the most developed market, better developed than India from education consultancy point of view. They have big companies similar size as that of Crizac. So the growth pathway will be slow, but it is in line with our projected growth.
Got it. Cool. And that's it from my side. Thank you.
Thanks, sir.
Thank you. The next question comes from the line of Naitik from NV Alpha Fund. Please go ahead.
Hi, sir. Thanks for taking my question. So my first question is if you could give us the conversion rate, on the one application that he has processed. And second, adding to the same is, where is this growth that we are seeing coming from? If you could give us which regions are, relatively doing better and leading to, say, 25% of growth that we've gotten. So that would be helpful.
Sure. Naitik, with reference to conversion, standard conversion is between 8 and 10%. Again, it depends upon where the application source is. If it is, let's say China, the conversion can be 25-30%. While if it is, let's say Africa, the conversion rate is typically 5-6%. What was the second question?
Second question is Second question I asked is some color on where is this growth coming from?
Yeah.
I mean, which regions are
the main growth is coming from Africa at the moment, where the percentage growth is bit higher compared to any other geographies.
Got it. So my second question is, if I look at your depreciation amount, I mean, there's a significant reduction if I compare it year-over-year. So just wanted to understand that. I mean, why is that so? I mean, 10-11 crores is reduced to 5-6 crores, roughly.
Yeah, and I think as the company is more into a platform-based, we follow WDV method of depreciation. So every year, the asset value goes down and accordingly the depreciation is reduced. In our case, we use a 40% depreciation rate. So if you take on a WDV method, it will keep on going down. Next quarter and next year, you will find it goes further down.
Thank you. We take the next question from the line of Chinmay Nema from Prescient Capital. Please go ahead.
Good evening, sir. Hope I'm audible.
Yes, Chinmay.
Yeah, sir, first question is, could you throw some light on how you go about partnering with universities? I mean, how do you select them, and typically how much time does the tech integration take at your end?
Chinmay, partnering with universities can take as low as a single meeting to as high as multi-years. In some cases we have seen trying to become a partner from last 6-7 years. So it depends upon institution to institution. Destination which are less popular, for example Middle East, it becomes easy to partner with them because they want to expand into India, and there is not huge demand of agents who want to send students to Middle East. While institutions which are very well established with their agency network, it is very difficult to get a partnership. But in general, these are multi-year negotiation and interaction with these universities.
Got it. And how much time does it take for the tech integration and setting up your onboarding pipeline for a specific university?
Sure. Once the university confirms that they are happy to onboard, tech integration others does not take much time. Usually is done within a month.
Okay. My next question is that I basically wanted to get some better clarity on the value proposition of going for a student to go from an apply using an agent and then to a platform of yours. Is it that it is better to apply in bulk to multiple universities, or does it help with better research, or what is it? Because I believe students who are applying online, they'd be capable of researching the programs themselves and finding a suitable program. So what is it that you help them with?
We are a platform which connects agents, so we don't interact with students. Students would go to local consultant and decide which university to go for. They will do all the research together and finalize. Once they have finalized, they submit the application to our platform. So we process the applications which are submitted to our platform and not make any additional recommendations or changes.
Thank you. We take the next question from the line of Utkarsh Kedia from BFS. Please go ahead.
Yeah, good evening, sir. I actually recently started tracking this company, and the top line growth really grabbed my attention. So can you please throw some light, like what are the main growth drivers?
Hi, Utkarsh. Thank you. The main growth driver is expanding into multiple geographies and destination market, which is helping us increase our number of students, thereby increasing our top line. Utkarsh, you there?
Yeah. And can you also tell me about like the threats from the any competitors, like the universities are building something in-house to grab?
there will always be a competition. So there are multiple companies, but the sector is very big, and there is a room for everybody to grow. So we are growing. The sector itself is growing almost quite heavily. Plus, at the moment our growth is only from India and some of the places outside India. The overall growth still remains very high.
Thank you. We take the next question from the line of Dharmal Shah from Dalmus Capital Management. Please go ahead.
Hi, thank you for taking my question. First question would be on the UK market, where the bulk of our revenues are coming from. UK, as you mentioned, is tightening rules for immigration. Do you think in maybe next 2 to 3 years the numbers could actually come down in absolute way? Because we have seen this play out in Canada and ANZ as well. So do you think there is a risk of immigrants and students, international students going down in UK?
Sure. Thanks, Simon. UK is trying to tighten its immigrations for non-genuine students. So, for example, they have increased the language requirement for students who wants to apply for job in UK. So they made it 6.5. They have increased the maintenance requirements so that the student who goes and study there, they have sufficient money and are not only dependent upon part-time job, which can affect their outcome of studies. So what they are trying to do is, they are trying to make UK as a destination where right kind of students go and study, and not people who want to study or who want to use study as a route for immigrating into UK. So they are looking for genuine students and not students who are abusing immigration requirement as a student. So for students, there is still UK welcomes people. It's only for non-genuine students. They are trying to create more barriers.
Okay, understood. So the language, the more stringent language test does not affect significantly for students at least.
Yes, though there is always some risk, and that's one of the reasons why we are diversifying into multiple destinations, in case any of those risks comes in.
Thank you. We take the next question from the line of Naitik Mohata from Sequent Investment. Please go ahead.
Hello.
Naitik, please unmute your end.
Yeah. Sir, I wanted to know, slightly going back in the past, in FY23 and 24, our growth was a little flat. It was, 473 crore revenue going to 530 crores only. Is there any specific reason what had happened in those years? That is my first question.
Hi, Naitik. Naitik, the 535 crore you are mentioning is not full year. It was, I think, for 2 quarter or 3 quarter. The final figure was 635, which is in line with our standard growth.
Okay. And then my second question would be, so from what I understand, the main cost in our cost structure is the commission that we pay to the counselors who have helped us get the students admission. So the other bigger cost head is employee cost. So I just wanted to understand that how do you see the employee cost going ahead in the next 2-3 years in absolute terms? Will it grow? Will it remain stagnant, or something of that sort?
It will grow, but the percentage growth will be less than the top line growth. Plus, with improvement in more and more tech, the ratio of growth will be much lower.
Okay. So, like first half, we did employee cost of 12.5 crores, and last full year the employee cost was 19 crores. So, any number that we can assume for full year FY26 or full year FY27?
I mean, roughly, the employee cost should be between 2 and 3%. Sorry, plus tech cost added together would be between roughly 4% altogether.
Thank you. We take the next question from the line of Rajakumar Vaidyanathan from RK Invest. Please go ahead.
Yeah, thanks for the follow-up, sir. Sir, my question is on the margin 25% that you mentioned, the EBITDA margin guidance. So I just want to know, since your top line is growing by 30%, there is no commensurate growth in EBITDA margin. Is due to the fact that your costs are mostly variable and there is no operating leverage that kicks in. Is that a fair understanding?
Hi Raj, we have given a projection of around 25% growth, and our costs are also increasing in the same line. So you'll find the EBITDA margin to be more or less constant around 24-25%. Obviously, if the top line grows, it will also go, but as a conservative figure, we keep a ballpark figure of 24-25% EBITDA as of now.
Yeah, thanks for that, sir. So my question is, generally your costs are completely variable, or it is completely in sync with your revenue, or there are any fixed costs in this?
Like our cost of sales, which is a major component, is variable, but rest all employee, tech and other costs are fixed.
Okay, got it, sir. Thank you so much.
Thank you. We take the next question from the line of Dheeraj from Roha Asset Managers. Please go ahead.
Yeah, just again reiterating the cash flow statement, we see two line items. One is other financial liabilities and one is other liabilities, which are 56.8 and 41.7 crores, almost close to about 100 odd crores. What are those outflows?
Just hold on.
Hi Dheeraj, I don't have the details handy. Can I get back to you on this?
Yeah, these are consolidated numbers, and the standalone also reflects a different number in consolidated. So what is the difference between the two, if you can just help us understand?
Sure, we'll get back to you on this.
Yeah, thank you.
Thank you. We take the next question from the line of Naitik from NV Alpha Fund. Please go ahead. Naitik, please unmute.
Hi, sir. Yeah, hi. Hi. Sir, one of my questions was similar to what last participant had asked. Was trying to understand the cash flow statement a little better. The other current liabilities, have actually decreased, and that is sucking up almost 90 crores of our cash flow. So my question was on the same lines.
Sorry, Naitik, I don't have the cash flow handy with me.
Right. Okay.
No problem. I'll also get back to you.
Sure. And sir, one more question. If I see your other financial assets, that has gone up by a significant amount. So is it fixed deposit or cash itself, or what is it? If I look at your other financial assets.
It's fixed deposit. Fixed deposit.
Fixed. Okay, so it's cash. Okay, got it.
Thank you. We take the next question from the line of Anand Parekar, who is an individual investor. Please go ahead.
Am I audible?
Yeah, Anand.
Thank you for the opportunity. I have a question. I think it was answered partially. So as we know that more universities are now setting up campuses. So I heard you saying that we'll reroute the students who are from other countries coming into India. So do you foresee the currently whatever amount you get per student from those universities, would that differ in terms of percentage? What is your outlook on that?
Anand, it will be quite early to make a comment, but I believe there will be some differences. But again, in terms of volume, you can bring in a much higher volume to India. But yes, you are right on assumption. There will be a difference in percentage commission.
Okay. Thank you so much for the clarification.
Thank you. Ladies and gentlemen, as there are no further questions from the participants, I now hand the conference over to the management for their closing comments.
Thank you very much, everybody, for participating. As mentioned earlier, this quarter we had grown better than expected, roughly 30% compared to our growth forecast of 25%. The company is growing at a reasonable pace, and we believe whatever forecast we have given, the company should do better than that in coming quarters. Thank you once again for joining this investor call.
Thank you. On behalf of Equirus Securities Private Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.
Thank you.